Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Wednesday, January the 11th, 2012. Well, a change of trend today, and the candle that we're analysing is this second last candle here. The final candle there is still forming, and change of trend to the downside. Yesterday we highlighted the spinning top type candle that set the market up for the change of trend, and today we've had a candle that's made a lower high and a lower low, and a fairly large red body candle as well. The red body denotes the sellers making net bearish progress on the day between the open and the close, and a decent amount. So the downside momentum that the sellers had previously is starting to come back into this market. Having said that, however, we do have a larger shadow on the bottom, and the market is finding support around this 127 level. Previously we could see a candle from 2 periods ago where it tested down below that 127 level and found support that extended down to 126.61, which is the low of the candle for today's trading. So very good solid support down at that level, and the sellers have lost commitment as they were trading down towards that level, with them only closing just down below the midpoint level, meaning that they closed with control, but it was very, very weak control, and really neither side had control of this market, only moderate control to the sellers. So not really the type of candle that you'd like to see establish a first time frame downtrend. Having said that, however, we haven't seen any strength from the buyers, and the trend has changed to the downside, so that is quite important. In terms of Ichimoku, we are still trading down below the cloud and trading below the Kijun-sen and Tenkan-sen, so this market is very negative in all three time frames. The Chikou span is below the corresponding price action and confirming the bearishness that we're seeing in this market. It's been some time since the market has been trading down below the Kijun-sen here, and that really tells a tale about the strength of the bears in the medium term and even the longer term time frame by trading down below the cloud. So quite a bearish market. This is a potential reversal pattern here, however. It is a tweezer's bottom, and tweezer's bottom are in adjacent candles, and there can be one or two candles in between when we have these lows down around the same area. So there is potential for the market to change trend and begin a new first time frame uptrend. But just looking at above where the candle traded to today, around the 128 level, we can see that in quite a few of these previous 4 candles the market tested to around that level and was rejected. So that will offer itself as very strong resistance for this market, extending just up to around this 128.20 level. So very strong resistance if the market does change trend. Above there we do have a previous low that can hold as resistance around 128.50, and that coincides roughly with the Tenkan-sen. Wouldn't surprise to see the Tenkan-sen hold as resistance if the market can gain enough upside momentum to trade up to around those levels. So obviously for today's trading, let's watch around the highs. We're not trading anywhere near the highs at the moment, although the candle that's forming at the moment is green, but certainly up around that level is very important. But let's also watch this low for a potential test at down to around the 25.86 level, which is an important support level, and look for a continuation of the trend to the downside with a lower high and a lower low.